Hi, Ricardo.
Hi, Anish.
Okay,
Hello.
so hello.
Great,
Hi, Florvilla.
great discussion, Anish. Wonderful.
Thank you. Thank you. Actually, now I'm very eager to hear everyone's opinion so we can have a short discussion before we move further into the session now.
Yeah. What I noticed that those countries that probably need it the most are not well prepared to use this technology and probably can be submitted to a different kind of fraud just because they are not aware of the risks.
That is true. But the need is the mother of invention, as they say.
Yeah.
So,
Yes,
so
I
the
understand. Yeah.
maybe we can have some opinion from people. We have people from Nigeria. We have people from Lebanon, from Syria. Maybe we can have some opinion if they can
Yeah.
share any experiences
It would be
with
nice.
us.
Yes, hi, Qatar. How are you?
Hi,
Hi,
Qatar.
Qatar.
So Lebanon, I think you mentioned Lebanon quite a few times today.
Yeah, it's
Yeah,
a country I must visit. It's on my to visit list.
you're most welcome. Yeah, I mean, a lot of what you mentioned obviously happened, in terms of the devaluation of the currency. But I totally also relate, and I'm puzzled by what Florabella just said, which is the countries that need it the most don't use it. We're talking, I assume, about the cryptocurrencies. I notice there are some adoption, but not on a wide scale as you might expect. And I think it would be something definitely which is interesting to explore if there's a way for us to think
But do you
of how we
notice
could.
it, Katak, that usually young people are the ones who are more prone to, adopt technology and all? Do you notice in Lebanon that young people are more, uh, or at least there is a segment that is exploring more?
Well, as you might expect, they're definitely adopting technology much faster, but even the older generations would still adopt if there's a use case and if there's active facilitators for such technology. Because everyone has a smartphone and it's just the adoption is not there. I know it exists at some extent, in some companies which are involved in IT, they pay their developers, but the demand is coming from the people who offer the services, and that's, I think, the key. That still doesn't exist. So if let's say people selling commodities would accept payment by Bitcoin, for example, then yes. But then I just don't know what it would entail for such companies and players to start accepting. I would expect it would require some level of regulation as well and trust, because there's the very big stigma, maybe more so in our region than in more in countries that have adopted it. But yeah, I mean, very, very puzzling situation and very interesting question. I really don't know. I'm sure there's something there to explore, though. Same thing, I know people in Sudan, which I'm very close to, and I was actually very curious. Maybe last year I was talking to them with the crisis that's happening there as well, and I was asking them, "Are you sure? How come there's no one using Bitcoin or other crypto?" They were not aware. Of course, this is anecdotal feedback. I mean, this is not research, but it still doesn't have this awareness or notoriety.
I was seeing a documentary about Nigeria. Maybe Temitop, are you there?
Yes, I'm here. I'd like to also say something. So
Yeah.
I actually really, really love your lecture so far. So I started, looking into cryptocurrency, blockchain, and all that in 2021, and until recently, it was still something very vague to me. But recently, I'm beginning to, understand it more. And your explanation of the evolution of money, it's really brought together all the things that I've been learning from the past years. So in Nigeria, well, the adoption is really, I would say, is really growing fast in the young people, among the young people, because, okay, if I have a small group of people that I'm, trying to, tell about cryptocurrency, why they should have a crypto wallet at least for a start. And some of them still say, oh, my dad must not know I'm doing this. My dad says crypto is evil, and it's not a religion based too. They have their religion reasons. I don't really understand that part. But aside that, I think the adoption is really, really growing. And I saw a documentary recently that says Nigerians are one of the people that are really adopting cryptocurrency, Bitcoin, very fast. And I think things are getting better now. Recently, also, maybe last few months, the government also, allow people to now trade crypto because at the beginning of this year, there was this fear to even let any crypto related word be mentioned in your account. Maybe someone wants to send you money from Binance and then it says Binance. Your account is immediately frozen and you don't have access to your money because they don't want you to, trade crypto or anything related to that. But recently, we we saw the people in the government, the politicians also talking about, okay, what is this thing, crypto, that our children are talking about? What I think we should start looking into it in the in the is it parliament or something? I watched in the news, they were really saying, the man said, I can't stop my child from trading crypto on this phone, so it's better we start looking into it as well. So it was really interesting, and I think it's been adopted and a lot of people want to do it. Recently, there was a crypto scam that actually, took away billions of naira from the northern part of Nigeria. People really want to learn about it. They want to really understand it. But of course, the scammers are using it as an opportunity to also, sweep people out of their adult money. So I think we still have a long way to go, but yeah, it's a good start.
But is Paxful very commonly used in as a crypto exchange in Nigeria?
What?
Paxful?
Paxful. There are a couple of exchanges. There are actually a lot that people are adopting that they are using. I don't use Paxful, but Binance is the most accepted. Binance,
Okay.
and some other ones like the OKX, like the Hobby, like Coinbase as well.
But the rail between the banking system and crypto, is it possible to send from your bank, or that's banned, the like sending of money from bank
Okay,
account?
so to buy crypto right now in Nigeria, you have to use a peer-to-peer system from the Binance.
Okay.
So you have to, send money to, you have the merchants on the Binance and the peer-to-peer system in Binance. So you send your Naira to them and then they credit you with cryptocurrency, with USDT, Bitcoin, whatever you want to buy. And if you want to sell also, you make a sell order and then the merchant, give you your crypto and you give them the Naira. So this is the only system that is being done in Nigeria right now.
Yeah, it's not the same. It's same experience for me because I was recently in India, and there also the government has come out hard in trying to control, so people cannot send. Even many crypto exchanges had to shut down because of that. So crypto trading is actually growing in India. It's one of the fastest growing. And Binance, for those of you who are not aware, we will probably be covering this in central exchanges and so on. So the peer-to-peer system in Binance is that, suppose I want to buy Bitcoins and someone else in the country wants to sell their Bitcoins. So Binance allows the order books to be placed, and then we do a direct transfer between individuals. So your money is not actually going to any exchange. Your money goes to the seller of the Bitcoin, and Binance acts as a escrow. So this is the way that in most countries where the governments have banned use of crypto, this is how these exchanges work, and they're getting more and more popular. Anyone else wants to make any comment about what we discussed or share their opinion, their experiences? Uh,
I can share a little bit. In terms of adoption, we can see two processes. We can have, for example, El Salvador, which approved as a legal tender Bitcoin as its main currency to use for payments, to buy commodities, etc. We can have that process, or we can have another process that is what the majority of the countries are having, which is basically the users see an opportunity, they speculate, they buy for whatever reason, and basically we can have that process too. So basically we can have two independent process, or we can have a mix. That is what is happening. I think it's in Nigeria. I think that they are also allowing to pay with Bitcoin certain types of taxes, certain types of things, but it's not yet still implemented at a very high level. But I think the step, it will be mixed. I don't think that, for example, in Europe, you are going to have basically Bitcoin being allowed as a legal tender. That will never happen in the short time. Maybe in the long term, who knows? But I think those are the two main processes, and that can exist the mix between the two processes. That is what I think is happening. And I think El Salvador is a great example for the countries, for example, in Africa, because you already have a lot of people working, for example, for some projects that are receiving in crypto, but they have to convert that crypto into the national currency. And I think if the governments of, for example, Nigeria, Angola, Mozambique approve Bitcoin or another currency, cryptocurrencies as a legal tender, that can be the way to go for them, and also to prevent the high inflation levels that we have been seeing in the last few years on those countries. But I think as the majority of their debt is in dollar, there will be a pressure for those countries to not go to legal tender as Bitcoin. Yeah. So that is the main issue that I think that those countries have and need to overcome in order to approve legal tender. We had El Salvador, which had a little bit difference, that it was that the majority of the resource was not, it was from people that is living in the United States or in Europe that were sending the money to El Salvador. So basically they had some kind of funds and hair that they could use in order to protect them from any backlash coming from the United States and the international organizations that basically manage their debts and negotiate the debts with them. But yeah, basically these are the two processes that I say: legal tender or to the utilization in projects and by the servicers.
Yep. Pedro, that's totally right. Yeah, but my personal opinion is that I think it'll be very few countries where we see this legal tender route, and it'll actually be more of a bottom-up adoption where you have small communities who start using it, especially when you are creating services. Like I gave the example of this lady, she started this Roya, she started this center in Afghanistan, and she started training young women on how to create IT skills, do some programming, and so on. And then the Taliban banned her, and she had to leave. But now she still has these ladies working from their homes, and she uses Bitcoin to make those payments. And so as more and more people realize that they can use this for instant transactions, and also I think the innovation is a big step there, as you have more integration of things like Bitcoin payments in games, in online applications, in online work, and that means the development community is very, very important there. As more products start getting produced, people will start using it, even if it's just to play a game or just to have some financial product. And
I don't think Bitcoin will be the first one, because I think the Trojan will be the stablecoins. Stablecoins will enter in those countries, which will protect a lot of users against inflation, and then they will see Bitcoin as a store of value. I think that will be the bottom to top way that will happen. That is my opinion. Yeah, I will leave
Yeah, I
the rest.
agree with you.
to
Yeah,
Latif.
it will be stablecoin and Bitcoin have to go neck and neck. But only threat here is if US ends up like putting some bans on stablecoin or something like that, that would mean people will have to migrate from stablecoins faster. But let's see how it goes.
That is the
So,
question.
so I can start with the next part of this topic. So the next part is we will analyze if Bitcoin provides a solution. We'll first try to understand what Bitcoin is. Later on tomorrow, we'll do the technical understanding. Today, we'll just have an overall view. And then, of course, tomorrow, the next class will be with Thomas about Ethereum and other tokens and other blockchain ecosystems. We'll see how they are coexisting and what their value propositions are. So let me start with continuing with the session, and then if we have time we can continue. And with regards to discussion, please feel free to use the Telegram channel to continue learning, because your learning is not just limited to what we are teaching in the class here. Continue to watch documentaries, share ideas. You can post some interesting stuff that you have seen, and you can share ideas on the Telegram channel. We can keep this chat continuing. And tomorrow we will meet each other in person. We will introduce ourselves. So I think what is learning is not just through what the teachers are teaching in this course, but it's also about how we discuss and share and learn from each other. So that's going to be fundamental. So now let's see about Bitcoin, and does Bitcoin solve these problems? Now, this is the question in hand here. So now the birth of Bitcoin. The birth of Bitcoin happened in 2008, and that was the time also we had this great financial crisis. Lots of banks and institutions failed. Lots of people lost their homes, lost their jobs, and people had a lot of resentment that the governments bailed out the big companies, the big corporates, the big banks, and they got funded even more. And the small the workers, the small entrepreneurs, when they lost, they weren't bailed out. They suffered, and so there was a community of you can say online um, degens or online community that was quite resentment about this whole fact. And before Bitcoin, there had been also several attempts made to try to create some kind of a currency, e-cash and other forms of currencies that uh, could be the internet's money. Because when the internet was actually created, internet was again created by a group of open source developers and online community of young people who felt that through the internet there was an aspect of people who were developing applications on the internet that felt that internet is kind of a revolution because it's changing the way businesses work. The rules on the internet are very different from the rules of physical governments, physical spaces. So it was always felt that the internet should have its own money. Internet should have in fact, there is this book of 1998. It was written, The Sovereign Individual, and that was a very, very interesting read because it talks about a scenario how the internet will power individuals who will become uh, very, very powerful because they could work remotely, they could work anywhere, they will be outside of any jurisdiction. And it had predicted that there will be an internet money, but most of the attempts failed because most of the attempts were always centralized. You needed some place, some server to hold the accounts of every transaction, and that server could be attacked, that server could be blocked. And the second flaw in the system was that all attempts on creating digital cash before Bitcoin was trying to peg it to the US dollar. But that peg is very hard to maintain. And that peg, we even see today, the issue with stable coins today, that those pegs, there are many challenges in doing that. So Satoshi Nakamoto was an individual who nobody knows. He's never surfaced. He's never come out and told who he was. This is just an artist's depiction of Satoshi Nakamoto working in his garage, underground garage somewhere, and writing this code. And he presented this code to an open source community. He presented actually a white paper, and then he developed the first code. And he said that this is going to be the electronic cash, peer-to-peer electronic cash. And for the first 1 or 2 years after this code was released in the open source community, he wrote the initial aspects of the code, but then the community started developing and implementing his vision that was there on the white paper. And there were certain rules that were designed. One of the rules was that anyone can create a wallet, uh, because a lot of cryptography is used. Tomorrow's class we will go over the technical details. Today just want to have an overview of what Bitcoin is. So idea is anyone can create a wallet. There needs to be no authority. You need to go and say I want to open a bank account like you need to do with a bank. Anyone can create a wallet instantly. And there will be the only way these this new coins, new bitcoins will be issued, will be through a process of mining, which means that the accounts of who holds how much coins will be kept over multiple nodes, and anyone can run a node on the Bitcoin network. Anyone, it is a completely fully decentralized network, which is its beauty, because that means if something is decentralized, it cannot be attacked. It cannot, you cannot have a single point of failure. If you have a one server somewhere, governments in that region can come and impose that, okay, you shut down this server. But if it's decentralized, it's like a hydra. It has so many heads. You cut off one head, a new head emerges. So that's the whole concept here. So the entire database, or the entire blockchain that contains all the transactions that are made and the record of transactions, they are stored over these multiple nodes, and anyone can open a node. I can run a node, you can run a node. You just need a server to run a node, and the same copy of that whole series of transactions will be stored everywhere. Now, how does Bitcoin work? It has certain properties. One of the properties is that you need to create new coins, and to validate transactions, means when people are sending their coins from one wallet to another, you basically need someone to validate that, yeah, this is a valid transaction. Otherwise there could be fake transactions. People could send coins, and so in order to validate that, tomorrow we'll explain how exactly it's done. But in order to validate that, there is something known as a proof of work. That means you need miners who run and consume energy, and who then can get the right to create new coins. And initially it was very easy, because you could run it on your laptop. You could run your mining system, and this mining is not just for the sake of creating new coins. When you are doing a mining activity, you are actually loading new transactions into the system. So uh, unlike, you don't have a bank here, but you need miners to actually put new transactions, so that in your blockchain new transactions can be registered. So when people send transactions to each other, that can be registered here. And to reward the miners for the effort that they are putting in, new coins would be created in the Bitcoin network. And so these new coins are created, and these new coins, every 4 years the number of new coins issued would be halved. So this is the process of mining, and maximum supply of the Bitcoin will be capped at 21 million. So right now we have something around 18 million or so coins currently existing, and the new supply every 4 year reduces by half. So that means it will just taper down, and then somewhere around 2100, at some point there in a couple of decades, you will have no more new issuance of coins. So supply will be capped at 21 million. So that's why Bitcoin is also known as digital gold, because the supply is very constrained. Supply is only, so the beauty of this kind of a system is that there has been many academics and who have tried to study and tried to explore and experiment, that if the parameters that Satoshi chose were different, how would Bitcoin look like? And they realized that these parameters are somehow very thoughtfully chosen, because you needed high issuance of coins in the beginning to incentivize more people to mine, and then eventually these new coins would be limited to 21 million. So the issuance can go down as the network becomes more and more popular. So this is And then there are certain attributes of Bitcoin that make it very interesting. Now I'll remind you that in the beginning of I had talked about certain attributes that a sound money should have. So one of the things is portability. It should be portable, means you can carry it around, take it everywhere. So Bitcoin itself is global by nature, which means unlike traditional banking rails and traditional fiat systems, each government, each country evolved its own system, its own currency, and then they need to speak with each other. They need to network, and you need to go through layers of various intermediaries. So getting interoperability is very hard in the traditional system, especially if the even if the governments want, getting interoperability is hard. But if the governments are fighting with each other, there are sanctions, then it's almost impossible to get interoperability. Bitcoin, by its very nature, is global. So portability is not at all an issue. Accessibility, not at all an issue because you don't need KYC. You have no gatekeepers. Someone in Africa without ever having a bank account can, in an instant, if he has the app, can open a new wallet. That's very simple. Scarcity. You have that scarcity, which means it will hold its value over time. You don't have any authority that can create new units, new monetary units, because creating new monetary units means stealing the value of the units that you have saved for yourself. It's one way of devaluing the value you have. So scarcity is there, so it has a fixed maximum supply. Verifiability, that means it's on a public ledger. uh, there is no question of verifiability. Gold, you still need to check, is it real gold? The note, is it a real note or a fake note? Bitcoin sits on a public ledger where verifiability is instant and easy. Durability, Bitcoin has had 100% uptime since 2008. Sorry, not 2018, since 2008. And since its creation, basically, since its inception, Bitcoin has been fully durable, reliable, so it has never had any downtime. Accessibility, it cannot be censored. Since Bitcoin cannot be censored, it is accessible to everyone. Transferability, it can be transferred very fast, uh, quickly, and easily. Now, some might say that no, but Bitcoin has congestion and Bitcoin. We will tomorrow discuss about that, about the different layers of Bitcoins and how Bitcoin at one layer you have at the base layer. Bitcoin has limitations in terms of its speed and scalability, but then you have layer two, layer three, other solutions that can provide that fast speed of Bitcoin transactions. This is something we'll be discussing. And then divisibility, you can divide it to 10 to the power minus 8 Bitcoin, which is one Satoshi. So as Bitcoin's value would continue to grow, probably we would not be using the term Bitcoin. In fact, it's often hypothesized that maybe in a couple of, maybe in a decade or so, I mean, someone who is a Bitcoiner is like he is like, we would say, a multi-billionaire. He's a multi-billionaire. He's a Bitcoiner. He has a one full Bitcoin. So probably, if Bitcoin succeeds, it's a zero or infinity game. If it succeeds, having one Bitcoin would be very hard because there are not enough Bitcoins so that every millionaire on the planet today can have a Bitcoin. So it is fully divisible, which means there's no problem. Now, the question is that we know Bitcoin has all these properties. It can be, if other than US dollar, I mean, today, the best of the fiat currency is the US dollar because of United States dominance. Even if United States issues bonds, creates more inflation, creates more monetary supply, there are so many countries around the world who have no other option but to buy the US government bonds. So it can export its inflation to other countries around the world, because there has been so much of debt issued in US dollars that there will always be demand for dollars. But uh, now the question is that if dollar slides, or we reach to a phase, maybe in a slow way, where dollar's value is also going down, the conflicts, geopolitics mean that countries cannot use US dollars anyway, then what other would they use? Would they use any other currency? Would they use the Chinese yuan? would countries trust? Even the BRICS countries. As an Indian, I can tell you, India doesn't trust China, and and there is this image of the BRICS, but India would never want to use Chinese yuan or empower the yuan. So countries around the world cannot agree on each other which currency to use. So so if Bitcoin is the one, now the question comes, why Bitcoin? Why not any other crypto? This is often a question asked. There are hundreds of cryptocurrencies. There is Ethereum. There are so many other layer one, layer two protocols. Each have their own coins, and then there were assets that can be issued. Now the question is, all of them may be useful. All of them will be useful because they are linked to a certain particular product. Ethereum is linked to the Ethereum network. If the Ethereum network starts getting used, Ethereum will have its value. It's like if Apple does well, Apple stock has its value, but we cannot use Apple stocks to trade. We cannot use it as a currency. So that's basically what makes Bitcoin different from other cryptocurrency. Other cryptocurrencies have a product, which means that can be of benefit to them if the product does well. But the beauty of Bitcoin is that it has no product, it has no company, it has no CEO, it has no individual to link its performance to. That may seem like a weakness, but that's a strength, which means it can be neutral and transnational. There can be no one government that will try to impose or control the CEO of Bitcoin because there is no CEO of Bitcoin. In fact, Bitcoin being the first issued cryptocurrency is the most widely distributed currency. There is no face. When there's no face, no one can attack it. And being the first original store of value gives it the first mover's advantage. That is number one. The second thing is because it doesn't have any product issued with associated with it, it doesn't do many things. It doesn't have any other functionality. It has only one primary functionality, which is to act as a sound, safe, secure store of value. It doesn't need to do smart contracts. It doesn't need to do anything. Those can be implemented in other layers. But the core value is just be a simple protocol that can't fail because it's so simple. It's like the original Nokia phones. They used to just go on and on, didn't have any functionalities, but they used to be so robust. So when you want something to be the world's money, you want it to be very, very robust and simple because there is a beauty in simplicity there. Secondly is launch. Bitcoin had an ethical launch. What does we mean? It means when Satoshi Nakamoto created the Bitcoin, he didn't have a greed of that I want to be rich of Bitcoin. He he kept himself anonymous so that he doesn't get all the fame and all the perils that fame brings with it, but also the fact that he encouraged the community to mine it. In fact, it would be seeing that every 10 minutes, one block is mined in Bitcoin. And that time, Bitcoin was worthless. He could, from his laptop, continue to mine it. But he had an ethical approach to creation of the Bitcoin, where he said that he used to actually wait till the end of the block time and encourage others to mine so that Bitcoin gets more distributed. And if no one is mining, just to protect the network, he would then start his machine and start mining. And he mined the first bulk of bitcoins out there. So there's a huge wallet with a lot of bitcoins, that is Satoshi's wallet. And then when the moment people started adopting, and it was actually 2 years later, it's known as the World Pizza Day, where one pizza was sold for 10,000 bitcoins, a very, very expensive pizza. um, but that time Bitcoin was worthless. And then eventually he just left. He said that now it's a big risk because I can be a single point of attack. Because really, the governments, the United States governments, went after Bitcoin. Anyone who was dealing with Bitcoin, he was arrested. There are people who've been arrested for decades for just because they were dealing with Bitcoin. It was tried. I mean, there was a lot of efforts to try to shut it down. So that's why Satoshi said, I'm now leaving. I have done my role, and now it's for the community. I want this to be decentralized. So he left quietly, and not one Bitcoin has moved from that wallet, and he has never resurfaced. And maybe at least people in the Bitcoin community would like to assume that he's either dead or he's no longer wants to or has no interest in using those bitcoins, which means that Bitcoin is the only asset that has been created where no one is holding the bulk majority of it. This is completely different from the story of every other blockchain project, because every blockchain project tried to do something. So they were more like a company raising funds. So they would create new coins, sell those coins, hold a big percentage of the coins for themselves for their development of their projects, which makes them securities like a company. But Bitcoin itself, the United States SEC has said Bitcoin is the only token or cryptocurrency which can be called a commodity and not a security because of this very nature of it. Thirdly, there is no group that can influence Bitcoin. There are open source developers, there are developers like Lightning Labs, there are other companies who are working on other level solutions. They are contributing to it, but no one can control Bitcoin. There's no one. So that's why it's quite secure. The protocol doesn't change much. Next, we will be talking that there's a concept of a blockchain trilemma. That means when you design a blockchain, you can either make it very fast, scalable, or you can make it very decentralized and secure. Now, Bitcoin is extremely decentralized, extremely secure because of its very limited block size. Because that means the blockchain of itself is not very large, which means everyone can run a node. Running a node is quite easy. And the more people who are running the node, the more decentralized it becomes, and the less chance it is that someone can attack it. And lastly, it works by proof of work. Now, proof of work means to create and validate transactions on Bitcoin and to create new Bitcoins, you need to put in energy. You need to consume energy. Now, that means that energy can be consumed wherever cheapest energy is available cheaply, and miners all over the world can work on it, which keeps it very, very decentralized. We will be discussing tomorrow about different consensus mechanisms and why proof of work provides that security. But these are the attributes of Bitcoin which make them pretty secure. Now, what has happened? What has been the trend? So Bitcoin runs through these cycles every 4 year when the halving happens, which means lesser and lesser Bitcoin. The rate of production of Bitcoin reduces. There is a psychology in the crowds that sees that okay, now that the Bitcoin production rate is reduced, the Bitcoin scarcity should improve, should increase. Maybe it's this psychology, but this has led the rise of 4 yearly cycles. So this is a logarithmic scale of Bitcoin price, and and you can see over here that every 4 years, because this is logarithmic, so it looks like a straight line, but you have a lot of volatility in Bitcoin, but this volatility reduces with time. But every 4 years, you can see that there are these peaks. Okay, so here there was one peak 2011, then there was a peak 2014, 2017, and then 2021. So every 4 years we have seen this trend that Bitcoin goes through a peak, and as the price starts running, more and more people try to get into buy it. So there is a mania. It goes through this mania phase, and then when the mania gets too strong, the bubble bursts, it comes down. But then each time different a lot of people say now Bitcoin is dead after 4 years. So it has this 4 year cycle that again then there are new participants entering, and this has been happening over the last 4 years. So since 2010 this has been happening. This is the trend. So it's hard to call it a bubble, but we can see that Bitcoin definitely has these cyclic trends. And because all of the cryptocurrency industry, all of the coins are linked to Bitcoin psychologically and even emotionally, so prices of every single cryptocurrency basically is following Bitcoin. I mean, if Bitcoin has a peak, that's when cryptocurrency markets boom. When Bitcoin falls down, most of these new cryptocurrencies fail and collapse and finish off completely. And this creates, in each iteration, new projects come in. And out of those hundreds of new projects. It's very, very limited ones who actually create value. So this is a natural way through which cycles work, and new and crypto projects are weeded out, and the really strong good projects like Ethereum and others, they have come up and stood the test of time. So but then what else has happened in terms of Bitcoin adoption? So last cycle was very interesting because MicroStrategy, which is one of the leading business intelligence software service providers, their CEO, he became like a Bitcoin prophet. It was like a spiritual awakening that he had. That he's claimed, Michael Saylor. So he claims that I have been seeing Bitcoin, but I was always skeptical about it. And then when he saw this massive money printing, then he realized the value of Bitcoin, and then it completely made sense. And since then, he has made Bitcoin as very strong part of his business strategy, and he put in billions of dollars of his companies, and it's a publicly listed company in the United States. And then Elon Musk's Tesla also started buying Bitcoin. PayPal has moved. Now you have BlackRock offering ETFs. So in the corporate world now, Bitcoin, from a point where it was seen as, okay, this is just a currency for drug dealers and smugglers and scammers, it has evolved to be seen as a global commodity, a global asset. And eventually, that's my speculation, that as more and more people start using it in real world, especially in the developing world, and as more and more applications and digital products start integrating them, which we will study on the innovations in the Bitcoin network, it will start becoming more and more mainstream. Now, in terms of national adoption, so those countries who were at the fringes of IMF and away from the current, who were actually suffering from the current financial system, those are the countries who are most prone to adopt Bitcoin. It will still be very, very limited, because once you adopt Bitcoin, you are also giving up sort of the right to to print your fiat money with a lot of impunity, because that's not very easy for countries and governments to do that. So that's why they do not like the US dollars. There are many countries, they don't like the US dollars, but they like their own fiat currency so much that they may be hesitant to formally adopt Bitcoin. But in El Salvador's case, it was not there, because El Salvador is a very poor, has been traditionally very poor country, very much dependent on remittances from United States, as Pedro recently as Pedro explained. So their currency has already collapsed. So they are totally dependent on US dollars. So they don't have their own currency. So for them, it was easy to adopt Bitcoin, be the first mover in this space. And that attracted a lot of startups, a lot of tourism, a lot of movement. They benefited a lot from that. And now El Salvador is, if Bitcoin really succeeds, it would be one of the richest countries in the future. Honduras, Central African Republic. There are many other countries who have proclaimed that Bitcoin will be there. Central African Republic, in Africa, most of these francophone countries or French countries which had French, they are totally dependent on France to print their money. So they really want to get away from that fiat system, because they don't control their own fiat systems also. So they might be likely candidates. That's why Central African Republic has actually officially announced that Bitcoin is a legal tender. And then Madeira's president, Albuquerque, has been taking a strong interest in Bitcoin. He's a Bitcoiner himself. He invited a whole community. In fact, I am one of the founding members of the Free Madeira Society. And next year, we have a very big conference happening in Madeira, where a lot of startups, a lot of speakers are getting invited. So we, as we can see, the global acceptance of Bitcoin is growing. Now, the question is, what will be the possible paths for Bitcoin? So technically, I think Bitcoin is getting there in terms of the development and so on, that it can challenge fiat currencies. And if Bitcoin succeeds, it's never a question of Bitcoin versus other coins. Some people have that in mind, because I think the crypto industry will flourish but for if Bitcoin flourishes. In fact, Bitcoin is like more like a mother that will support the innovations in the whole digital industry space, and that's how the industry sees it. But now the question is uh, whether Bitcoin can become a global money. And that doesn't mean governments have to formally adopt it, but can enough critical mass of people adopt it that and there are three possible paths. One is Bitcoin fails, and if Bitcoin fails, we will see the debt spiral as we have seen in many of the other countries. Eventually we'll see it in Europe, eventually we'll see it in United States. We will and it is a slow process. It may not happen overnight, but over next 1 or 2 decades we will see more authoritarianism, more power conflicts, more I see the introduction of central bank digital currencies one step in there, so that the controls can get even stronger. I'll have a discussion on that later. And second idea is, what if Bitcoin coexists with fiat system? This, I think, is the best possible scenario for the world because it's not so difficult. People get enough time to make a slow movement to an alternate financial system, while the existing system, although dying, it dies over the next 20 years. If something like that happens, I think it's the best scenario because it will be a slow transition. It provides people with the optionality to protect their purchasing power, and at the same time the governments, when they see that an alternate exists, they'll have to put a check on the money supply growth, because earlier people have no options. You have guarded all the, you have ring fenced yourself, and you have put all capital controls. But now when Bitcoin is there and it's not possible to control it, if you hyperinflate, your currency will go down in value and you will ultimately lose your currency. This will happen at a much faster rate. So that's why I do not think I think that if this coexistence is there, the governments will eventually have to become smaller and put a check on their spending, which is net win. It may look like, oh, government will spend less, but imagine the a lot of useless spending that we do over wars, over and over bureaucracy, that will also go away, which will be a net positive for society. And then because Bitcoin is there, there will be actually a global competition for this capital. So so when you have this global competition, it means capital can easily flow, because now people can move to Bitcoin and move their jurisdiction to somewhere else. So the countries which are offering more value for your taxes, for your, those countries will attract the individuals with the highest value, and eventually more companies. And then as governments start competing with each other, sometimes you learn from the successes of others. And what is the third reality? That fiat currencies fail faster than we expect. And when they fail, eventually there will not be any central banks at all. Bitcoin will be the only main asset. There will be a lot of other digital assets, digital tokens. There will be commodities. There will be crypto will be one way of fundraising. There will be a lot of companies. There will be a lot of innovations, but there will be no central banks to control money supply, interest rate. We will actually be moving to a Bitcoin based fixed money supply system. And that's very hard and tricky because all our economics is based on Keynesian principles, which is based on constantly inflating money supply. It's a debt-based system. And from a debt-based system, now you move to a fixed money supply. Those are two incompatible systems. They cannot coexist. So it may lead to a lot of short-term pain. And it will have other impacts, constant price deflation, because if your money supply is fixed, it will keep getting more and more stronger. Prices of everything will keep falling. Uh, it may lead to elimination of war, because government will have very little to spend on all of these, so they will rather focus on spending on the things that people really care about. So taxation will be the only way the governments can raise money. Today, taxation is a in many countries it's a small percentage, and the bulk of the revenues governments generate is by creating more money supply, issuing new bonds, issuing more bonds. So in a hyper Bitcoinized world, we will look what would happen if Bitcoin becomes the global monetary system. And so in order to explore that, we have to go a little bit dig deeper into economics, because all our economics is based on Keynesian economics, although this monetary system is only in the last 50 years. We haven't really experienced more than that. Austrian economists, they are another school of economic thought that talks about how if gold was a standard. But that's a very hypothetical school, because even Austrian economists have never really got to implement, because you never really had Austrian economics in the form. And a Bitcoin economics, I think, would be very different than a gold-based economic system, because of Bitcoin's very nature. You would have a lot more globalization, you would have a lot more global trade, you will have a lot more digital innovation, which means what would a new system look like? And the truth is, nobody knows. The truth is, no economist knows, no person knows. I will just share some of my thoughts, what I believe such a new system would look like if it were to happen. uh, these are some of the impacts. So now, if you have, now, of course, Bitcoin is a fixed money supply system, which means currently when there are booms, its value rises very fast, and you have these big spikes in the Bitcoin price. But because Bitcoin is still very small, but as Bitcoin starts becoming larger and larger in terms of its share of global exchange of trade, it will become a slowly deflationary currency. It won't become something that will just keep rising with the same speed. In fact, its value, I mean, imagine a world where all fiat currency has collapsed. Then you don't compare the value of Bitcoin in terms of dollars, because that's meaningless. You would just compare the value of Bitcoin with respect to goods and services. So prices of everything will continue falling because of this massive productivity that I already explained. We have this massive productivity. We will have lot more. We'll have free energy. We will have more sources of energy, and these innovations would mean that prices of all commodities, goods and services that can be mass produced will continually following. In fact, what would become valuable is something that you need a human being, you need a human touch, you need a human's thoughts, human creativity. I think those things will still be scarce, but everything else that can be commoditized will go down to zero. It's like a smartphone, which was so expensive, but today, even if you are a poor person, you can afford a smartphone. So that's why even in developing countries, poor communities, everyone has a smartphone today. Um, what will happen is that when you have a slow deflationary currency, you will have increased savings, because today people cannot save, so they are incentivized to go out and spend. And that's what, according to Keynesian economics, that's what is good for the economy, because because if money loses its value, people will spend more. But what happens is that this also means that you are spending unnecessarily. It also means that it's not compatible with climate change. It's not compatible with sustainability, because if I really need something, I will still buy it. If I need a laptop today, I will buy it, although I know its price might decrease next year because the technology will improve. But I need it today. So the things I really need, I will still go out and buy it. But the things I don't really need, I will not buy. So you will have increased savings, maybe more sustainable spending. Now, the question is, what will happen as in this new system, in this new deflationary system? Because money will get more valuable with time, it will become harder and harder to service debt. You can, because uh, so today that you can get an interest free rate by even putting your money or buying bonds and so on, and and some of them are risk free rate, because you can buy a government bond and that's supposedly risk free. But you won't have something like a risk free interest. That simply won't exist. So debt, it in itself would also involve certain risks, because whoever is borrowing, if he fails, even if it's an institution, because governments cannot print more bitcoins and give you back. So you will have reduced role of debt in the economy, but increased savings. That means today, because houses and everything is getting expensive all the time, I need to go to a bank, borrow money from my future in order to buy, because with my savings I can never even dream of buying a house. But when we move to this economy, you will have a savings-based economy. So first you work, you save, but that savings will grow in value faster. So you will be able to buy goods and services more from your savings than from debt. So the role of debt, I believe, would become smaller and smaller in the economy. And the new engine of growth would become crowd investment, because now people have savings. People all over the world would have more and more savings. So if you want, so that's why I think the blockchain and cryptocurrency will morph to the form where startups will start raising more and more investment globally from crowd investment, because now people, when they have more savings, they feel that, okay, we are not so, I mean, it, the people will feel, in fact, more and more people, if they don't feel that they are in the state of poverty, what do you do with your savings? You start thinking that, where do I invest? And when you want to invest, investment is a very gratifying activity. Investing actually, for those who do crowd investments, they sometimes invest because they believe that this cause is good. Sometimes they invest because they feel that this startup will make an impact. In fact, there is a lot of wisdom in the crowds. There is a lot of wisdom with people. And when your governments are so big, when your institutions are so big, it's only the governments and financial institutions who have the capacity to invest in projects. But when people in general have that capacity, you will actually get people to vote on which projects they would want to see grow. And I think that would be good for the economy. Salaries will always fall. But now what happens today? We have officially stated 10% inflation rate. The real inflation rate is maybe 20% every year. So maybe in 3 years, in the last 3 years, probably prices have risen 50 or 60 or 70%. And I got a 3% raise in my salary over the last 3 years. I am a public servant. I got a 3% raise. So which means I got poorer. And now I need people need to negotiate with their bosses, with their companies. And imagine in a country where you have, for example, Turkey, the price, your inflation was 100%. But if you try to go and speak to your boss and say, I want to double my salary because inflation was 100%, good luck, because that doesn't happen. So eventually, in a constant inflationary scenario, the onus of negotiation is actually on the employees. So that's why employees keep getting poorer and poorer. But in a deflationary currency, what happens? The companies start get making lesser money, so they need to renegotiate the contracts and they need to reduce the salaries. But but uh, but the onus of that now is on the company itself. But your prices meanwhile are falling faster, because all the benefit of all the innovation, of all the productivity, of all the global competition accrues directly to everyone instead of to the people closest to the money printer. So prices are falling faster, your salaries are also going down, but going down slower. It's a completely different system. You cannot use the economics and the education of economics of current monetary system in this new system. So, because it's not the deflation that happens today because of immense job loss. Today, if deflation takes place, it's because companies are going bankrupt, there are job losses, people don't have money. That's why deflation is seen as bad in the system. But in a hard money Bitcoin based system, deflation actually means greater wealth accumulation by everyone, not by a few. It doesn't mean that there will be equality, but equality is probably not even needed. If everyone is rich enough to easily buy their goods and services, because price of everything is falling forever, then maybe equality is not really needed. What is needed is abundance for all. Do you have enough? So this is a complete different paradigm shift. Now, what will happen when you have money on a global permissionless network? Firstly, immediately everyone is banked. You don't need huge campaigns to say, let's get people to be banked. No, everyone is banked. Everyone is equal. If I'm a startup in a developing country or in a developed world, there is equal opportunities, because now we have the same currency. Today, what happens if one country has high productivity, starts producing more, starts exporting more, their currency gets higher in value, which means now they become more expensive. And so there is a competitive devaluation of currencies between different countries. And in the end, people suffer because they lose out. But when you have a common currency for the world, now you can have a level playing field and you can have global capitalism work at the individual level. In fact, the role of governments in controlling as to who gets to trade with whom immediately gets reduced because the whole world comes together. And when the whole world comes together in peace and in common monetary union, there can be no war. We have seen from the experience of European Union, war in Europe stopped because we have the same currency. How can we afford to go to war with each other? But that can happen at a global level, free trade amongst global citizens. What will be its impact on government? Firstly, you'll have a leaner government. When you have a leaner government, means government has very limited resources, and the only way the governments can get money is by the conscious contribution by its citizens. So today, taxation is an enforcement, but in this new system, people would want to contribute. Uh, so maybe even the kind of taxation, even what you levy the taxation on, would become different. But in this new system, it is you will have to have more citizen participation. You cannot have citizens not wanting to participate and being enforced. So governments naturally become leaner, which means a lot of functions that today governments do will have to be done by private individuals. So even things like education, healthcare, what many people have this fear that, see, in United States you have private healthcare and it's so expensive. But the problem is that United States is not a true capitalism. United States is an example of a crony capitalism where the government controls the who can uh, enter into the healthcare space, and only few big corporate companies who are supported by the government can provide these healthcare services. Similar for education, that's why it's so expensive in the United States. But when every individual can be creative and provide their own and provide these value to society, whether it's healthcare, whether it's education, whether it's even other business services, you will have a thriving private entrepreneurship, because the government itself becomes leaner, and the money system forces the government to become leaner. And then there is competition now amongst governments to attract capital and talent, because no longer can you just simply survive simply by printing more money. You have to convince the people to come contribute, because you are giving them value, you are giving them an environment that they are enjoying. So that becomes the natural incentive. Today governments have no incentive to become leaner and more efficient, simply because they are a monopoly. So any system that works with the government is inefficient. It's by nature inefficient. And I can say that because I work for a public institution, there are good aspects about it. But I'm sure that if we were dependent on the fees of our students and not by on government doles, we would be far more efficient and leaner as an institution. There would be greater citizen partnership, and then, of course, less wars, larger share of income again remains with citizens, because now taxation cannot be an imposition. Taxation has to be a contribution. So citizens stay with more money. They stay with more money means they have more purchasing power. The economy grows, because in today's world, in our reality, citizens have very little disposable income. So the government becomes the big buyer. So all businesses and services, or most of the productive ones, have to have government as a client. But now, when you have a larger economy, the private citizens have more disposable income. Your capitalism grows naturally, and then with those extra disposable income, you citizen reinvestment of their capital grows in size. What will be its impact on financial innovation? Now that we are moving to a global monetary system, things like micropayments is paying uh, now tomorrow I'll be talking about Bitcoin Lightning Network. You can make micropayments in the form of small satoshis, maybe cents or pennies, you can make it on demand anywhere in the world. And these kind of micropayments means you could integrate them into all kinds of applications, games, social networks, media, content, means you can have new forms of pricing models. Uh, the credit card based system, the Visa, Mastercard, does not allow you to make micropayments. But in the future, you need machines to interact with them, settle micropayments at a global scale. So this digital integration and then smart contracts, automation, AI, all of those layers can build on these payment networks to build new systems of the future. You can have global microcredit, micro investment platforms, because now capital can move easily amongst people. So wherever there is opportunity anywhere in the world, capital will flow there, and the world can grow and develop together. Now, now it doesn't mean it's all rosy and Bitcoin will solve all these problems. No, but Bitcoin's growth has to happen along with the growth of the whole digital ecosystem, innovation ecosystem, AI based innovation system, and most and all, growth of human consciousness. Because as long as humans remain in this petty competitive consciousness and keep, I mean, healthy competition is of course good, but today we are in the consciousness of war. So as humans also need to evolve from being savage stone age consciousness to a consciousness which is collaborative and productive. So that also has to happen. So now, last point before we move on to question and answer, is there is now the central banks felt a lot of threat with this whole cryptocurrencies, and actually they're it's obvious they'll feel threat, because if the national currencies move and then something else comes, and then you lose your power and control. And sometimes they have genuine interest of society at hand. I at least I hope so. But they said, okay, we will make innovation in our fiat currency space. So they created this central bank digital currency. And I like this cartoon because Satoshi here is looking at US dollar, this giant elephant, and this Bitcoin is this small penguin. And then Tether is like, okay, taking US dollars and putting it on Bitcoin. And then there is this penguin with the elephant's head saying, this is central bank digital currency, which is, you claim that I want to have a crypto, but then it is centralized because it is issued by the central bank. What is the purpose of it? And I have tried a lot to go through every single white paper issued by central banks, every single statement from Christina Lagarde, from Powell, from all the central bankers, and one of and this is my analysis, that one of my fixation or problem was that every time I hear a startup idea, first thing I say, what is the problem you're trying to solve? And I have not heard in all those white papers any clear coherent thing that this is the problem that we are trying to solve. uh, what a central bank digital currency is, that today we keep our money as liabilities of commercial banks, because we do not directly hold the base money, because that money is what the central bank has an account for each commercial banks, and they settle with each other. So all our money that we use is basically liabilities created at will by commercial banks. Now what CBDC or central bank digital currencies aim to do is take that, give us the possibility that we can move certain amount of the commercial bank liabilities and move them directly to the ledger of the central bank. So central bank will give each person a wallet, so we can hold that our currencies directly with the central bank. But the problem is that our whole monetary system is built um, on expanding debt by banks, and that's how the system is based. So so moving everything to a central bank would completely distort the system. The system is not ready to do that. So that's why central banks say that, okay, we are going to only allow things like, I mean, this has been the statement on the official white papers of European central bank, that only up to €1,000 you will be able to withdraw and put it in the central bank. But the question is, what is the problem you are solving? Sometimes it is said, oh, we'll help with faster payments. But I said, but there are already instant payment solutions, SEPA payment, instant SEPA payment is already well implemented. Payment is not a problem in Europe. So what is the problem again you are solving? So there is no clear answers. Sometimes the claimed or stated motivations are that we want to be innovative, we want to innovate. There is this crypto, we want to also be very, very innovative, but you cannot be innovative just for the sake of appearing innovative. And the second stated, and this was very interesting, it says we want to ensure user privacy. But if now I have a government entity that can, earlier all my transactions was distributed across multiple banks, now everything is in the hands of one entity. If that entity wants to block me, it can block my one single account. uh, does it mean I have more privacy or less privacy? Now this is again a point to debate. Third thing is we want to compete with crypto, but you cannot compete with crypto because when we talk of crypto, let's talk about Bitcoin. Bitcoin's value proposition, core value proposition, is limited supply. It cannot be debased. So now, how does CBDC even compete with that, with crypto in that aspect? Other cryptos have products around it, so there is no way a CBDC is competing with crypto. Maybe it is competing with stable coins, but stable coins value proposition is that I can take it on a public blockchain and move it anywhere around the world. And especially people in developing countries, countries in with sanctions, they are using stable coins. They are the ones who really need it. But you cannot do that with CBDC because probably CBDC won't even need a blockchain because there is a central bank. Why would you want to move it on a blockchain, which is a less efficient form of data storage than a centralized server? Well, more control over the economy. This has been a stated goal, and in fact, China does it to a big extent. They have a social credit system, so if you are not a good person, your accounts can easily be frozen. This What would be its implication? I think there will be more and more direct control by central banks. One advantage or disadvantage, as you want to see, could be that when they want to stimulate, they can issue new amounts of currency and link it, that okay, you have so many units, monetary units issued. If you want to if you don't spend it by the end of the month, it will disappear. So that way maybe they would like to stimulate the economy, but then again we are going into a more and more communist based controlled economy rather than a free market economy. And some of the banks are also very threatened because if it's limited to a very small amount, yes, probably it doesn't affect the banks, but then it doesn't provide any solution or value proposition in itself. But if people are able to move all their money from the commercial banks and move it to the central bank's ledger, the commercial banks will have no business. So it's a big threat to the commercial banks, and that is one of the reasons why there has not been any clear understanding about how would be the relation of commercial banks with respect to when a CBDC grows. Where I see CBDC could be interesting is in terms of international trade, when countries need to make their settlements. If a CBDC based system is there, entities or companies in different countries can make those settlements easily. And that's the only strong value proposition that I see, although that is very rarely clearly stated by most central banks. And so this is my maybe a critical assessment. I know there are experts, maybe there are people who have a lot of other opinions. Maybe they think CBDCs are very net positive. From my perspective, it may have certain advantages, but in no way does it compete with Bitcoin or any of the other cryptocurrencies. So with this, we end the session today, and we have some time for some question answers and discussions before we close.
Okay, Anish, thank you. There's some questions here. I don't know, Ricard, if you want to put a question, or I can do an overview of your questions. What do you think?
Okay. Okay. Thank you very much for your presentation, Anish. During your presentation, I made some posts in the chat. Okay. And I have several questions that it will be interesting to have your view about them. The first one is, for me, debt is also associated with the time value of money and the opportunity cost regarding to different investments, for instance. The concept also applies to crypto coins. This is my first question. The second one, regarding this debt discussion, could you give an example how this may apply to business intents on capex investments? Without debt, it is not. It is practically impossible to make those costly projects. I'm talking about projects in energy, infrastructures, intents on capital. And as far as I seen during your presentation, in a hyper Bitcoin world, okay, you foreseen that banks may appear in the paper of being lending platforms. These lending platforms, in my opinion, aggregates a large sum of crypto as liquidity aggregators. And in principle, these liquidity aggregators match supply and demand for issuing the debt. What is your opinion about these questions that
I loved all of your questions, Ricardo, because it seems you really put very thought-provoking questions. And in fact, I'd like to copy and paste it because even though I may answer it, but I would like this discussion on these questions to continue on our Telegram chat. So let's go one by one here. So first question is debt associated with time value of money. Uh, so the time value of money completely gets inverted in a hard money supply because obviously it doesn't apply in the same way. So I'm not talking about crypto coins. Let's stick to a scenario if Bitcoin is the central coin today. So the Bitcoin today would be far more valuable, or any kind of investment in Bitcoin using a Bitcoin based currency, because it's a money whose value grows with time rather than reduces with time, which means that if you're going to make an investment with your Bitcoin, you better make an investment in a place where you consider that the gains would be far more than the growth in the value of the Bitcoin itself, which means that investors will be far more selective in terms of where they invest. But this doesn't mean that they will not invest, because if you have a lot more capital accumulation and at a steady state, let's assume that Bitcoin has grown to a steady state, its value is not, probably instead of today like we see 4 or 5% inflation, we would probably see 3 to 4% of deflation, or maybe 2 to 3% deflation on an annual basis. So you still need to the same concepts still apply, in the sense that if you would need to find an investment where actually your income generation should be, or revenue or growth of your investment should be more than, say, a 5% annual basis, which means the easy money is over. You cannot just borrow money, buy a house, let it double in 3 years, and then go and pay back your loan. That won't. You will still, but you will still want to invest in innovation projects or projects, because investment, because will become global by nature. You will also have a lot more opportunities, and that means a lot of firms evolve around the crowdfunding and crowd investment basis. There will be evaluators, there will be third parties developing who will manage and control. There will have obviously have to be systems for greater disclosure, greater transparency, so that the investors are more confident. But the time value of money still holds. The equations still hold. It just means that today, when you have a negative interest rate scenario, you're ready to throw your money at anything. That will not exist. So it simply means that. Now, your next question uh, here is capex investment. This has been, when I spend a lot of sleepless nights imagining what a Bitcoin system would like. And this has been always the question in my mind also. How would capex based systems fund? Because today we are so used to large investments, governments have to come into place. But naturally, the new system will have to have greater role of private investment there. So probably there would be large infrastructure players with big balance sheets who will make those investments, large capex investments. But again, crowdfunding will have to be used, and if there are platforms which allow for greater citizen participation, and if citizens are convinced that a particular investment in a country, for whether it's for a road, whether it's for infrastructure, is actually beneficial to the users, I'm sure that that people would be ready to contribute, and you can have these mass contributions. There can be rules and regulations that, for instance, if you are, which would resemble our taxation system of today, which means if you are living in a particular state or a particular country or a particular province, and if the majority feel that certain project is necessary, then that the taxation system would still exist. So now, but because we will have a lot more capital accumulation by individuals, I think in the investment and crowdfunding could could uh, could be sufficient to cover these big capex investments. And also remember that in a deflationary world, the capex investments may not be so large as it is today, because today it seems so large because individuals are impoverished by governments, and the government balance sheets are huge compared to individual balance sheets. But if this whole thing inverts, maybe it's very hard, it's very far-fetched, I know, because in our system, but we won't have any other choice. It will be hard to issue so much of debt unless people are willing to lend out, so it will in a crowd lending way. But I think people would be far more um, comfortable making a crowd investment, or or if it is for the benefit of the society in itself, could be in the form of crowdfunding, it could be a form of taxation. But the concept of capex investment that we know today, take a huge debt because you have great monetary expansion, it would look very, very different in that world. uh, and and then the third question is in the concept of debt arising from lending platforms. Yeah. So I think the kind of banking system we have that allows you to put your deposit, that deposits is supposedly lent out, although it doesn't work exactly the same way as I explained. It's actually new loans that allow for new money creation, but you could not have a system where you can guarantee the depositor to be having the right to take out your money anytime you want, and at the same time the money is lent to someone else. You cannot have that at the same time. So I think time deposits would be the route. So there will be a form of banking, but it wouldn't be fractional reserve banking. It would be time deposits where you deposit your money. You will have a time, 2 years later, you will get so much of money back, and that money will be lent out. So you cannot just go and pull out your money. So I don't think that kind of banking will exist. If you want someone to hold your money, you I don't think you will receive, and the right to withdraw anytime. That's basically a institution acting as your own as your private wallet. You could do it yourself. I mean, if you have enough technology, you can hold your money yourself. The only reason you would put it on a time deposit is, of course, you're getting the interest, but then you're also partly taking the risk, because you won't have any governments bailing you out in case the borrowers of the bank are unable to loan them. So I think the whole concept changes, because you wouldn't do it with 100% of your savings. You would not put 100% of your savings in a time deposit in a bank to be lent out, because even though risk might be small, there is that risk. You would keep certain percentage of your income, maybe for in your own personal private wallet, because these services would get far more easy to use. And with the excess savings which you have, because imagine in a deflationary world, everyone is getting richer all the time. So what do you do with that extra money? Okay, I might invest somewhere, I might lend it out somewhere, and I might donate something for some cause, or I might, and and also this requires a little bit elevated consciousness from the individuals, because now that people are not living in poverty and misery, they can think of contributing, because otherwise, so many people will die with Bitcoin in their wallets. Why not make use of that for some productive purposes? If all your needs are met, if constant inflation means all your physical and material needs are easily fulfilled, maybe, and that's what happens in the Maslow's law of hierarchy of needs. When humans' basic needs are met, he has now other needs. His goals are self-actualization. His goals are growth, are more knowledge based, are more community service based. So I think human nature will also change as our economic and financial system changes. So a lot of this is speculation, but I hope I have at least tried to answer your questions.
Thank you very much.
Any questions, Mar?
I have a question. Thanks, Professor, for your presentation and sharing your knowledge with us. Recently in the news, there is the Twitter of the person, Satoshi Nakamoto, is active again, and it said that there is in BBC recently, they has an interview with the Australian man named, I think, Greg Wright, that he is telling that he is the person who creates Bitcoin. I want to know if does it have any effect on the future of the Bitcoin, or if this person is the creator, or it doesn't have.
There was a very simple way to know if this Craig Wright was actually Satoshi Nakamoto. He said that he was told that if you're Satoshi Nakamoto, then there is this coin with 1 million bitcoins that Satoshi Nakamoto is mined.
Yeah.
That is this wallet. Why don't you move 1 bitcoin? Because you should have the private key. You move 1 bitcoin and to prove that you are Satoshi Nakamoto,
Yeah.
and he failed to do that. So I think it's an open and shut case that he is one of the various imposters who is now trying to claim that I am Satoshi Nakamoto. The true Satoshi Nakamoto, I don't think we will appear, because we have a lot of material from the posts he posted on the various forums, where he was really committed to the movement of Bitcoin. He was not doing it for the money. He was not interested in the money. It was a truly altruistic venture, and if he wanted, he could have made a lot of money and run away. And Craig Wright clearly wants money and fame, so that is not the case.
Thank you.
But I think, yeah, I think tomorrow, that since we have a class, many of you would be a little bit tired, so I think we can close now. Put or post all your questions on the Telegram, and tomorrow also, when we have time, or even during our lunch and coffee breaks, we will spend a lot of time together. But my suggestion is, if you have a question, immediately post it right away on Telegram, so that you don't lose it, because your questions are very, very invaluable. Post it on Telegram, and some of the questions I'll answer in Telegram itself, and some I will discuss tomorrow during the time we spend together.
Okay, more than
So,
more than the more technical deep dive that we are going to do tomorrow. Everything that we hear today and we discuss today bring us a loophole on our mind, because indeed we have to distance ourselves from the nature of today to try to enlighten what it could be, and this is very hard to do, even for some of us which are used to do it. It's really hard to do it. That's why please take in your mind this kind of distance all the time, and please be hard with ourselves, because we need to hard in a way that we need to put the questions, even if we think that the questions are so far-fetched, so strange, they should not be applied. No, these are the best questions, okay? And if you have this in our mind, this will be a huge and great course for everyone. And this is what is important to have in mind. Okay, see you all tomorrow. And it was great also because I already have a lift. Thank you, Pedro, for your generosity to catch me in Parque das Nações. Was perfect.
No, all good. Anyone who needs a ride leaving, well, not everyone. I can't take those many people in my car, but at least 3. If I will be leaving from Parque das Nações, I can give a ride to anyone who wants to meet nearby. So I think it was Ricardo, Rafaela, and
Zabia.
Okay. I just sent the link. It's just across the street because I'll come from that roundabout, so we'll go straight to the highway from there. So I can't be there.
Yeah. So thank you so much for the lecture. Just before we end it, I just want to ask you if we're going to get the recording for this session and the rest of the sessions, so we can just review the missing points that maybe we lost during
all the online sessions will be recorded.
Yeah.
The in-person sessions not necessarily. We don't have this for sure for now, but on the online sessions for sure they are recording like this today, and we are sharing the recording to all of you.
Okay, thank you so much, and have a good night. See you tomorrow.
Yeah, Florella, thank you also for your question. I'm saving the question for tomorrow. Okay.
Okay, thank you very much.
Okay, sleep well, rest, and tomorrow have a great day.
Okay,
Okay.
see you tomorrow.
Bye. See you tomorrow.
Everyone.
Bye.
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 I will put a poll, a thought on the Telegram, so you can guys
Thank you.
I can think a little bit about it. Bye.
Thank
See you
you,
tomorrow.
thank you. See you tomorrow.
Bye.